Over the past few weeks, you've probably heard about this mega viral GameStop trend, but you might not know the details of what's going on. In this video, I'm going to explain how it's basically become a proxy war between the rich and the poor, and it's the most exciting news on all of planet Earth right now.
The story you could not avoid this week, and maybe the one you couldn't quite understand either. You're not alone. GameStop.
GameStop.
This GameStop situation is the craziest I think I've ever seen.
GameStop?
This will be short-lived and everyone's got to be really, really careful because it's going to be like catching a falling knife.
A week ago, a member of an obscure niche on Reddit called Wall Street Bets turned a ridiculous $55,000 long shot bet on a company that was all but certain to die into a $47 million position for himself and became the most impactful market mover in the entire US economy. The possibility of this event existing is so random that the best storytellers on Earth couldn't have dreamed of creating it. Part of it is David versus Goliath story. Part of it is the culmination of our postmodern meme culture becoming a real force to be reckoned with against the old guard of our old economic system. GameStop, that brick and mortar company with an outdated business model, a trade-in system that makes the guys from Pawn Stars look philanthropic and who has to compete against Amazon, Walmart, Target, and Best Buy. How are they still in business? Well, the company was largely dead, and then COVID lockdowns happened, which solidified it. Then the short sellers came in to profit off its demise. Short sellers profiting from failing companies is pure free market capitalism. Happens all the time. Business as usual. No big deal. To solidify the death knell in the middle of 2020, Sony and Microsoft released new gaming consoles that don't need discs at all. You can already download the games right to the consoles, but this signaled that the era of discs was officially over. What the heck would you ever need to go to a GameStop for? GameStop was going to die and no one was going to miss it. All was right in the universe. But behind the scenes, something deranged was brewing in a deranged little corner of the internet. Wall Street Bets is a self-admitted outlandish group of stock market investors who make long shot bets on stocks and post their obscene gains and obscene losses on the subreddit for all to see. They actively call themselves retards, autists, and people who borrow money from their wife's boyfriend to buy stocks. They use the cliche but appropriate hashtag YOLO to go along with their irresponsible trades. I've been lurking Wall Street Bets for years, and I love those guys, but I could never do what they do because I'm a prudent and smart investor. But it's always fun to live vicariously through them. It's hard not to get FOMO when you see an 18-year-old idiot making hundreds of thousands of dollars just for taking a shot. And to be perfectly fair, they post outrageous losses all the time too, which is the whole point of the group. It's not coordinated investing or smart investing. The whole point is to gamble for an outsized win. It is not a place for reasonable or responsible investors of any kind, and if you want to learn or become an investor, do not go anywhere near this place. It's more like a circus sideshow of clowns having a laugh over very real stakes. Somewhere in mid-2019, a Reddit user named Deep Fucking Value, I love that name, looks at a nearly dead GameStop and sees that it is being shorted tremendously. I suppose he saw that the stock price was cheap and had a few speculative upsides. The company has a ton of storefront, they had cash on their balance sheet, they were being mismanaged, COVID looks like it might end over the next few months, and the hotshot CEO of Chewy.com had recently become appointed to the board of directors to try to turn the ship around. It was a mega long shot that GameStop would rebound, but he decided that if he was right, he would get rich, and if he was wrong, he could afford to lose the $50,000. And it was fun posting on Wall Street Bets. He made the trade, he sat on it for months and posted memes on Wall Street Bets about it over and over again while people largely insulted him because that's what they do. And it slowly picked up momentum, and in early January, the Wall Street Bets community started buying GME in volume. Hedge funds prey on dying companies by finding a stock they believe will decrease in value and buying short positions against it. In this case, Melvin Capital came in and borrowed a ton of GME stock and sold it at the current market price, and with the intent to repurchase the stock at a lower price when it falls to pay back the original position. Let's say they borrow the stock at $4 each with the idea that the stock will drop to $2. They sell their $4 shares immediately to someone else at $4, and when the stock drops to $2, like they predict, they purchase the same amount of shares at $2, pay back the original shares with those shares, and they keep the $2 spread. This is how you can profit from a company's loss. That's what Melvin Capital was doing, but with a couple of billion-dollar position. The other thing this hedge fund did was overbuy the available shares to forcefully drive down the market price. This happens every day, and it can seem a bit ruthless, but that's capitalism. This is part of the strategy. It's a natural part of the market cycle, and in this instance, Melvin Capital was making the right play. But Melvin Capital messed up. Wall Street Bets knew that this was what Melvin Capital was doing, and they knew that Melvin Capital had overplayed their hand, so they created a virtual guillotine by forcing the stock price up artificially. Now we are in a position of chicken. Chicken is when two people are locked in an all or nothing game with each other, and the first person who folds loses. Think two cars driving as fast as they possibly can towards each other. If no one swerves, they both die, and whoever swerves first is the chicken, and they lose. Even though losing means you get to live. Which is why chicken is only a game that brainless lunatics play. Which is why Wall Street Bets loves this game. What's especially neat here is the stakes keep getting higher and higher as we go forward, because every time the Wall Street Bets people buy the GME stock, the price goes up. And then the brokerage does a margin call against Melvin Capital. Let's go back to our example where Melvin Capital thinks that the price is worth $2, but they borrowed at $4. And they made $2, right? This is fine if the stock goes down like they predicted. But if they borrow at $4 and the stock goes up to $20, they now have to pay the $16 difference on each share. This is why short selling is so dangerous, because the potential losses are infinite and it's on debt. Melvin could pay the margin call and sell off the short position at that time and cut their losses, or they could pay the difference between what they borrowed at and what the new stock price is and continue to hold their short position with the assumption that their stock prediction price of $2 was correct, and eventually the stock will eventually come down, drop to it, and they'll make money. So they opted to hold, thinking that they were right. What could possibly be more exciting than a high-stakes game of chicken between a big Wall Street hedge fund and a niche group of Reddit mouth breathers? Nothing. Still, this should have been a fun but largely irrelevant little sideshow for nerds to nerd out about, while no one else would have ever understood or cared what was happening. In every other parallel universe, the original Redditor goes broke and GameStop goes under. But in this universe, the Wall Street Bets people drive the price up, the game of chicken goes unbelievably viral, and the stakes have never been higher. The stock price was $4 in mid-October when it started picking up steam. I don't know what Melvin's short position was. I'm using $4 number earlier just as an example. Somewhere around 2 weeks ago, the stock price jumped up to $20, and the Reddit idiots make a ton of money. The OG of this movement, Deep Fucking Value, was up to $2.3 million on his $55,000 investment as of December 17th, because of course he has to post his stock tracker every day for everybody to see. He tells people, I'm not gonna sell this thing. If more people buy and drive the price up, then Melvin has to double down. This thing could skyrocket. It's called a short squeeze. Well, if you just made 418% return on investment and you're telling me it's not over yet, and I'm a fucking idiot who hangs around Wall Street Bets with money to waste for laughs, I might do the same. And many people did. It got so exciting that Jim Cramer is talking about it on Mad Money. Elon Musk is tweeting about it. GME is trending on Twitter. People who don't know anything about the stock investing hear about it and are asking, what's the deal? It's the most volume traded stock at one point this week. What the heck is going on? This was a long shot bet that should have never worked in the first place, and the company itself hasn't turned around or changed in any way. This is an obscene statistical anomaly driven by the antics of a mania and a ridiculous meme culture, and in a second obscene statistical anomaly, something that should have been contained to a weird niche on the internet somehow gained the biggest possible attention across all platforms for a whole week. And anyone who joined it had the possibility of not only making money, but also sticking it to the man. In late January, the stock price was driven up from its probably appropriate $4 price to an utterly insane, batshit crazy $400 per share. This forced Melvin Capital to inject nearly $3 billion in additional market calls to keep their position before ultimately closing out their shorts and eating untold billions in losses. When it started, Wall Street Bets only had 2 million subscribers, and I don't know how many of them are active investors on there, but statistically that should be a fairly small percentage, with most people like me just lurking. This is why it has become an enchanting David versus Goliath story. This little Reddit crowd using a no-cost brokerage called Robinhood went against an institutional and well-funded big-time Wall Street bully, and the little guy sort of won. On January 27th, Reddit user Deep Fucking Value posted his daily YOLO stock tracker and showed a balance of 47 million. Do not get things twisted to think that this was a guaranteed get-rich-quick scheme. You had to be part of it early, it happened fast, and it was in a complete contradiction to all actual financial principles. None of this has anything to do with market fundamentals, proper economics. This is closer to what's called a pump and dump scheme, but a scheme is a coordinated attack. These morons are not coordinated. Do not participate in this. As this thing gets more popular, the powers that be want to seem to shut it down. The Securities Exchange Commission gets involved about possible collusion inside of Wall Street Bets, which I personally don't think is going to amount to anything. But then Reddit starts to shadow ban and make private Wall Street Bets, only to have it come back due to overwhelming outrage. Then the Robinhood app itself shuts down trading to users for buy only, which is actually crazy because that means they won't let you buy shares to increase the price, but they will let you liquidate shares to lower the price. The Robinhood trading app, named after the famous tale about Robin Hood, everybody knows this, right? A corporate shield for Wall Street poses as a charitable outlaw who steals from the rich and give it to the poor until the poor get too much power and then Robin Hood betrays them. That's the updated version at least. There is a real complaint to be had against Robin Hood and the other brokerages that limited their user behavior when it didn't suit their needs. It's free market capitalism for the hedge fund, but market manipulation for the retail investors when they do the same thing? The legal battles for this are ramping up and just getting started. This is gonna go on. That said, the short sellers have largely taken their losses and moved on. My guess is the stock was probably gonna come back down to where it should be, and while social fallout around Robinhood and the animosity between small investors and the big Wall Street hedge funds will continue, I think the excitement for this is mostly over. Also, does anybody remember GameStop? The company that had basically nothing to do with any of this and just got caught up as a proxy between two polarizing forces in the market. They're gonna go back to being a struggling company, likely towards bankruptcy. I wonder what their conversations at work had been like this week. This event is going to be an unforgettable moment in the life of many involved, but if you're not participating, this is a fascinating story and nothing much more than that. It won't affect your life or the larger economy in any way. It's little more than fabulous theater. I don't think that this is going to have any revolutionary large economic effects like some people are saying. If you're looking at this as some kind of get-rich-quick scheme or you're just getting FOMO about this, know that that feeling is normal, but prudent investors don't invest by feeling. In fact, that's sort of the first rule of prudent investing. However, I should hope that this encourages everyone who currently doesn't do any investing to start looking into it. You don't want to take any advice from the brain-dead morons at Wall Street Bets, but it is good insight into the possibilities that investing will allow. You have more power than you realize. Lastly, I want to tell you that this ties in perfectly with my last video about a growing inequality problem. The #1 trend on Twitter this week was #EatTheRich. And the whole movement in the Wall Street Bets community right now has nothing to do with GameStop and everything to do with the demand to shift power from the rich to the poor. And Wall Street Bets did do something that no one else has ever done. They made Wall Street lose at their own game. As Ivan Vanko said in Iron Man 2, if you make God bleed, people will cease to believe in him. Never before has the little guy had so much financial power, and this week they realized it. The trend of animosity that I talked about before will continue on, but one side got powerful new weapons this week. If you like this video, like, subscribe, and most importantly, stay tuned for the next one. Thank you.